Yo, good morning, traders, and welcome back to another episode of Market in the Morning. Happy Monday, guys. It is Monday, July 13th already. We're almost halfway through the summer. Let me know, guys, have you been having a good summer? Have you been enjoying the summer price action that's been giving us a whole lot of extra nothing? Or have you been trading the range and trading it properly? Guys, we got some headlines we got to cover. Over the weekend, some stuff went off, some bombs, some attacks, some headlines. So we're going to cover those here in Market in the Morning. I'm going to show you guys how to use Market AI to your advantage and so much more. I'm also going to give you some actionable insights, some great price levels. And if markets give us a good opportunity, we're going to take it during Market in the Morning. So hit that like button because Market in the Morning starts right now. Yo, good morning, everybody. Guys, drop a good morning in the chat right now. We're pulling it up. We're taking a look. What is going on? Good morning, Andrea, Mr. Random, Ted, hello. Thab, what's going on? Piyush, good morning. Famous, good morning. Good morning, everybody. I like you some. Hey, bro, listen, man. It's Monday after the weekend. We all got sleepy eyes, but we're not. We're good, bro. We're good. We're ready. We're hype. Energy's here. Elisa, good morning. Minhal, good morning. Xavier, hello. What is up, everybody? Good morning and welcome. Ryan, what's going on, guys? It is a good morning. Silver, hello, guys. Today is a good day to have a good day, and that is up to us. Adam, what's going on, guys? Run that like button up. Let's get started on a strong note. Market in the Morning. Let's dive right into it. So S&P futures juggle Iran war, CPI, and Fed hike rates. Tomorrow, we have CPI. What is CPI? CPI is our core inflation report. Gives us some insight and it gives the Fed some clarity to the answer of, can they hike rates? Should they be looking to cut rates? Or should they be looking to hold rates? So right now, if we're looking at our CPI year over year, our last reading was at 4.2%. Now, this came out once oil was trading at such an extreme because of the war. Now, higher energy prices, higher oil prices causes higher inflation prices because that causes things that everyday consumers have to then spend more money on. So inflation went through the roof at 4.2%, doubling what the Fed's forecast and target is, which the Fed's target is 2%. So with all of that being said, prior being 4.2, now we're looking for things to settle down. We know that oil, we can take a look at the charts real quick. Oil has taken a real turn back to the downside. It's no longer trading above $80 like it has been since the beginning of March. Since about mid-June, we were able to break back below 80 and keep ourselves down there. So now that we see that we had this, okay, oil shifts back to the downside, guess what? That's going to be a shockwave, a ripple effect to the market. We're going to now see, well, look at this. Bank forecast 3.8%. That's already 0.4% lower than the prior. So they're expecting and anticipating inflation to come down along with these cheaper oil and energy prices. So tomorrow we can expect a 3.8% on the bank forecast and the minimum and maximum range. Check this out. Looks like they even increased the maximum a little bit here. They before, I don't know if you guys remember, the range, I believe, was 3.7 for minimum and 3.9 for max. Now we're getting 3.7 minimum and 4% for max. So they're starting to see a wider range here, a higher possibility that, yeah, it does come out a little on that high end. And if it comes out on that high end, guess what? We could hit our little, I don't know what we'll call this. We used to call it our brain icon, our analyze with AI icon, our star icon, whatever you guys want to call it. Just don't call it late for dinner. We could hit our star icon and it's going to tell us, okay, if we're looking at CPI, how's our playbook showing us we should be affecting the markets? So if I hit impact on, we look at ES, the S&P 500. If it is higher than expected, we know to look for a bearish reaction. And the higher it is on that scale, the stronger the reaction and the bigger the trend we'll have that day, the higher probabilities of a trend that day when we break outside of that bracket of minimum or maximum when it comes to one of these reports. Whereas if we are very below, that's going to be a very bullish indicator for the S&P and NASDAQ. Yeah, I know, right? Yeah, I'm gonna let them know in the chat. Get the brain icon back. I liked the brain icon too. Sadiq, good morning. What's going on, brother? Kimmy, good morning. Muhammad, hello. Volume lower than usual. You guys let me know. Is my volume all right today? Or do I need to pick it up? Do I need to pump up the volume? Let's see. You guys let me know if that's any better. I pumped it up. I added everything on my side. Mariri, what's going on? 453, what's going on? Hello, everybody. Good morning and good morning. Let me know if the volume is A-okay or not. All right, guys, so that is our CPI. That's how we're getting ready for CPI tomorrow. That is tomorrow. Today, we do not have anything big for our news. Nothing big on our economic calendar. I just got to move my mic out of the way a little bit so I could see the screen. So with that being said, we could go on to some of our charting now. We could look at some of our charts, find some key levels. We could look at our bias on gold. So let's take a look at gold right now. What do we have on gold? Gold is back on that slightly bearish. Yes, sir, Blaze, you already know, man. We should be getting Jeevan here soon. I know he's a bit of a late starter in the morning sometimes, especially it being Monday, but hopefully he will be here very shortly. That was the plan, right? We can always plan, just like Outkast, the musician, right? The artists say, you could plan a pretty picnic, but you can't predict the weather. We could plan Jeev being here, but who's to say that he doesn't run into his own situation, that he might not be able to make it? But I haven't heard anything from my end. He should still be joining at some point. So make sure you guys run that like button up if you're excited. Does he need a late? He does. He absolutely does. Thank you, Ken. I appreciate that, man. Always got to look good. You look good. You feel good. You're ready. You bring good energy. It's going to come right back to you guys. Always bring that good energy. Positivity is contagious. Gold under pressure as Hormuz conflict lifts oil and inflation fears. Now, we talked about how oil is back below that $80 mark. However, if we look at a closer range, right? So this is us looking here and looking at the past few months. This is actually year to date right now. Here's 2026, the start. Here's where we were at the highs, up 130% at some point on oil. Now we are down about... We were down as much as 38% from that high. Now it's making its way back higher, 32% from those highs. Still elevated from where we were at the beginning of the year. So that's why we're not expecting inflation to have the biggest of drops. However, it is still starting to climb again. We see it starting to climb. We see volume starting to pick up a little bit right here too. Nothing as consistent or scary, I should say. In terms of volume picking up aggressively, right? When volume picks up aggressively over here on oil, we see that every day it was picking up while oil was breaking out. Right now, what do we see? We saw oil try to break out, and we saw only one day start to pump with volume. So I don't see this as a super strong reason to be like, oh, wow, I'm super bullish on oil. Yes, the headlines, those are going to be the reasons that keep us bullish on oil. So let's take a look real quick. Gold headlines, oil headlines, anything that's going to be impacting everything. Garrett, good morning, man. Yeah, yo, Jiva's coming, bro. Jiva's coming. He'll be here soon. And guys, this Thursday, I'm sure you all know her. Mel, one of the traders, one of our affiliates here, is going to be joining us for Thursday's episode. Very special event. Wednesday, we have also a special event. We're going to have Jeev and Nolab on, and they're going to be showing you guys the full launch of the brand new Market AI TradingView integration. It is sick. It goes over your bias, gives you a whole lot more information than just the news headlines and the economic calendar, which, if you ask me, those are the core of market. Those are the core of market because it gives you that insight and it gives you that direction. And of course, it gives you the playbook. Yeah, guys, it's going to be awesome, man. W's in the chat for Mel. It's going to be a great session. Now, she doesn't trade New York, but we're still just going to chat about markets, talk about how you guys can use MRKT Market AI to gain some idea of your fundamentals, break things down, how she integrates it into her trading, and so much more. So, guys, really cool there. Be excited. It's going to be a great week, man. I got a great week scheduled for you guys. We just got to see if Jeev joins for day one. And guess what, guys? If he doesn't, we're still going to kill it. We're still going to break down levels. We're still going to find trades, man. I'm bringing the energy today. All positivity. We're killing it. We're starting the week off strong so we can end it stronger. Period. Awesome, guys. Great stuff. Great stuff. What's up, Malvin? Good morning. All right, let's look over some headlines right off the bat, man. We got to catch ourselves up with what happened over the weekend. Let's start with our high-impact headlines. Iranian guards claim strikes on U.S. sites in Bahrain. Okay, so Iran attacking U.S. U.S. aircraft destroys Iranian cruise missile. Drones are IRGC fires on commercial vessels in Strait of Hormuz. Again, more war premium, right? This is escalation in the war that just a week ago was under a ceasefire and working on a peace deal. Now it seems like all of that has been crumbled up, thrown into the garbage, and things are right back to where we were. But it's important that we know two things. What's going on? Is it picking up? And how is the market digesting it? Is gold really selling off from this? Is the S&P really selling off from this? Or are markets starting to digest this as it is what it is type of information? We're really waiting for CPI. Because remember, CPI is going to help the Fed, which is the FOMC, the Fed committee, have a better idea of where they're positioning, right? The monetary policy. Does the Fed want to see us start cutting rates because inflation comes lower? Does the Fed want to see us start to hike rates because inflation isn't going as lower as fast as we want it to? There's going to be a few things that we have to keep an eye on. If we're looking at oil prices rise more than 2% as U.S.-Iran strikes in Middle East. Again, this is a headline that's going to help us 14 hours ago. Reduces supply through Strait of Hormuz. We know when there's a supply issue, price moves higher. Think of it this way. If I'm selling, people use bananas. Let's go with cookies. If I've got 100 cookies and I have a price, my revenue target is $200, I'm going to sell them 100 cookies, $2 each. If I lose a lot of my supply without selling them, there was a fault in the business, there was somebody blocked the Strait of cookies and I only had 50, then guess what? If I want to hit that $200 target, I have to increase the price of how much I'm selling those for. So guess what? Now I have to sell them for $4 a cookie, right? I have to sell things at a higher cost because the supply was hit. Yo, Ironclad, good morning, brother. Yes, sir. Mel is great, man. Yeah, Mr. Random, you're here every day. You'll see her. She's great. She was here in the comments on the last episode, but she's a phenomenal trader. She's from Australia, I believe, so very cool there. But it's awesome, man. Guys, while we're at it, drop your name and where you're from. Let's see all our traders all over the world here in market in the morning today. Treasuries, a little update on treasuries. This was 2 days ago on July 10th. Ukraine struck 10 Russian tankers. Now, any Ukraine and Russian news, since it has began, it has not been making an impact on our market. So we got to just sort of leave it alone, one year out the other, because we also know it has been going on for so long that any news headlines that come out, they're the type of headlines that we have to sort of see it before we believe it. We have to actually see something happen instead of just taking a headline and going, oh yeah, sure, it's over. We're better than that. We're smarter than that. Brazil via the Woodlands, Texas. Nice. There we go. Indonesia. Look at this, guys. Let me pull up that chat on the screen. Woodland, Texas. We got India, Indonesia, South Africa, another Texas there, Morocco. There we go, guys. Beautiful. Kimmy, Australia, from the HTL represent. There we go, HTL represent, guys. That is the community that Mel is from. Very cool, guys. Awesome to see all that. That is great. People all over the world. Cook Islands, nice. Let's get it, guys. Iran, oh man, bro. Yo, you're getting the news before it hits us. You can make something happen. You could show up on one of these headlines. No, be careful. Please don't. Trump says Iran has asked for continued talks, agrees, but state ceasefire is over. This is 2 days ago. Again, guys, these are headlines that we covered those 2 days ago when it was happening. So nothing else major on that high impact area. Breaking news tab. This is where we're going to go over some more recent and some more active breaking news. Now, high impact. So, guys, how it goes is we get all, right? This is all of our headlines Then we have a popular tab. This is where traders like yourself are able to hit the bookmark icon on specific events that you think are important. And let's say a lot of people vote on this one right here. Iranian Guard claims strikes on U.S. sites in Iran. Well, guess what? Now it's going to show on that popular because so many people are starting to vote and save this one. Is Jeeve coming on or just yo, Jeeve should be coming on. That was the goal today. I will tell you guys, that was the goal. I just shot him another message right now. I sent him the link to join. That was 1,000,000,000% the goal. And of course, the bank's calling me now because now is a great time to call me. Trump says he held an 11-hour meeting with the Iranians yesterday. This was 8 minutes ago. This is our newest headline we have on the situation. If you don't know how this is going to impact equities, you could hit that brain icon and it's going to tell you. Jews. Risk off is imminent, is immediate. I got to zoom this in a bit, ladies and gentlemen. I'm on a new monitor. It's one of those high def ones, so it makes everything smaller so that it looks more clear. Risk off is immediate market read. The headline signals a possible diplomatic opening, but in a conflict already centered around the Strait of Hormuz and fresh military strikes. Let's see. It mainly keeps geopolitics at the forefront, which we know this already if you join here every day. The main channel is lower tail risk for oil supply disruption, just like the cookie reference we had, which can ease energy-led inflation, which is good. What we wanted to ease energy-led inflation and support duration-sensitive assets if talks are credible. Talks are credible, man. Yep, nothing new on that front right there. The thumbnail is a good idea to let audience know today's guest before. Yeah, exactly. Yeah, that's one of the main reasons we have the thumbnails. Give you guys a bit of an idea and have them change all the time. Famous. I thought the same thing, bro. I thought, yo, this is a good clickbait. We're gonna use Jeeve as clickbait today. He's here. Jeeve is coming soon. Oh no, he'll be joining us in 5 minutes. I'll be joining us in 10 minutes, and I'll keep fishing it in, keep reeling it in for you guys. But let's take a look. Hey, there she is. Morning, Mel. Good morning. Good morning. I was just hyping everybody up for our phenomenal Thursday episode that we're going to be having. Tons and tons going on this week. We have today's episode, which hopefully G will wake up soon and come join us. We have tomorrow's episode, which has CPI. Wednesday's episode, which will be hosted by Jeeve and Nalab, because they're going to be introducing you guys to the brand new TradingView / market AI integration. Thursday, we have the one, the only Mel joining us to go over markets, how she uses MRKT, and everything else, a little bit about her strategy, her system, some nice market chat where she's seeing gold in the future and what she likes to do. But guys, amazing, amazing stuff. Yeah, guys, Jeeve is coming in 5 minutes. Guaranteed, 100%. Are we seeing a retest of previous day low for potential sells to the 4,000 in light of the latest geopolitical tensions? Great question. Let's mark out some charts. Let's see what's going on. We'll start with our gold for you guys. First thing we do want to take note is where oil is. Oil is higher than its previous day's low. It is above its opening price. Oil is currently bullish. We know that that's going to have more of a bearish impact on gold. What am I going to do? I'm going to add some alerts surrounding oil so that if we get a big move to the upside or the downside, I'm alerted and I'm prepared. You guys could be doing the same thing. But I think, you know what, Mel? I think he thinks that because it's a female trader. And us guys are a little bit of dogs sometimes in this industry. But we were talking about that the other day too, how great it is that, just a few years ago, trading was a very male-dominant industry. It was like 90, 95% male. But now we're really seeing that split start to happen. We're getting that maybe 80%, 20%. So it's great. Trading offers opportunities for everybody. Does not matter your gender. And obviously, guys, look at everybody here. It doesn't matter where you're from either. We have people from all over the world here accessing and trading the same financial markets. What a blessing. What an opportunity. What a time to be alive. Run that like button up, man, if you're enjoying today's episode so far. Yes, let's do it. NQ just bounced off a fair value gap on the 5-minute. Cool, bro. I'm going to check that out in just a moment. Let's run through gold real quick. I know a lot of gold traders in this arena. Let me get my gold chart up. Where do I have my gold? I got to get my layout back and ready. Gold. There she is. There she is. 1,000,000%. Let's get it. Right? Awesome. Why is my gold chart looking like this now? All right. We're going to have to fix this, guys. Gold, and symbol interval. All right, so we just got to put XAU USD on our right-hand side over here, GC on our left-hand side over here. That way, guys, when I'm marking out one, you'll be able to see the price level on both. I'm going to start with GC, mark out those levels real quick, and then I'm going to translate them over to XAU USD for you guys. So let's get rid of this purple zone to get started. This was a phenomenal key area from last week. We held it on Tuesday. We used it on Wednesday as a target and a resistance point. We used it on Thursday as a support area. Then we used it again on Friday a little bit to show us that we're within that range. So what are we going to do? We've broken it so many times. I'm not that interested in it anymore, but I'm also not interested in this green zone down here either. I'm going to be marking them and deleting them, starting fresh. We see our open price today on gold is above us, which means we're currently on a bearish day right now. What do we like to do, guys? We like to start on that higher time frame. Give me an idea and give you an idea of that daily, right? Has the daily been bullish? Has it been bearish? Well, the first thing we see, guys, when we open the daily is a big bear move. It's a big move to the downside. Now, when we zoom in, we could see our more recent price action. Now, our more recent price action, though, is suggesting more of a range. We're seeing a buyer step in and fail. Sellers step in, and sellers are succeeding, though. Sellers were able to take us to a new low of day right here. New, not even all-time low, but new low of the year-to-date low. So we do want to keep a very close eye on gold. See if we can try to sweep some lows again and make our way lower. We're below our previous day low. We're below our opening price, really signaling a stronger shift to the downside when it comes to gold right now. I'm going to mark this level out right here. And what we're seeing right here, guys, is we're seeing higher. This is a lower low. So lower low, lower low. And then we have a higher, lower high because we failed to move any higher. Now we would be looking for price to continue towards those lower lows again. But for us to make our way to this lower low down here around 39.60, we do first have to break 40.30. This is GC. I will break down XAU USD as well. Yep, we broke previous day low. You got it. Absolutely. Awesome. So let's take a look real quick. I got it. My bar isn't hiding for some reason, which makes it a little hard to... Oh, come on now, taskbar. Get out of my way. Oh, ladies and gentlemen, I got to hold up, change those settings real quick so that the taskbar is not in the way. We could just turn it on so it's not automatically hide. Yeah, that's fine. Just for now. Just so I have access to this little button down here so it shows me both charts. Previous day low, same on XAU USD, guys. We broke previous day lows at 40.72 on XAU USD. I don't want to delete that purple area yet on XAU right here. Is a very strong zone we see price reacted to. So we want to keep an eye on that, see if price can return to that level today. Just deleting any old levels that aren't relevant for today. 4 hour, let's check our 4 hour time frame, see if there's anything relevant here on the 4 hour. And I'm really not seeing anything. You know, we had some support down over here at 39.87. We do have some more support over here at 40.40 on XAU USD, 40.40 right over here. And we can take a look and see if we could find that area. Yep, so that's an hourly demand zone down there on XAU. Same with gold, GC. That is a very strong area where buyers were able to reverse price. Take a look. Price was selling off. Lower lows, lower highs, lower low, lower high, lower low, and then we were able to reverse. We swept that recent lower high, created a higher low, and we're able to move a little bit back higher temporarily. So knowing that information, doing our pre-market prep, preparing for the markets, I'm going to look for a reaction off of this zone. Does that mean I want to take a buy off of this zone? Not necessarily, or at least it's really going to depend on the context of the market and the follow through that we have at that point. If we get a reaction and we create a fair value gap, a low volume shelf, and let's say you're an orb trader, we trade back into the orb, whatever the case may be, that's going to be your trigger to possibly take those longs off of demand. Without a strong formation off of the demand, then I'm just going to be looking for a reaction to take it short yet again. So that is a quick little rundown on XAU USD and GC. We could take a look at the 30-minute one more time as well, see if there's anything of interest. I do see a small area of resistance near our more recent high, and that is going to be right over here, guys. So take a look at this zone right here, and if we drag it out to the left, I always tell you guys, if you're marking out zones and you're not sure if that zone is going to be that relative or that strong, you want to take it, you want to drag it to the left, and if you see prices reacted to it multiple times, which this one has, we've had resistance, support, support, resistance. So this is a strong key level area that we're looking for on GC around 40.82 to 40.87, whereas XAU USD has that same area from 40.74 to 40.78. Let's see who said something. What we got something in here? I would love to understand how events are priced in. Some events the market already has taken in for account. How do we know the difference? Great question, Mel. Fantastic, fantastic question. So the way we can see if an event is priced in is a lot of times the forward looking. When we talk about markets pricing something in, we're really referring to how markets are always forward looking. So a great example of this, let's pull up our backtest fundamental chart over here. And we'll take a look. We're on ES right now. When we had this whole rally up, oh no, this is April. No, this is all last year. Oh, it's not. Oh, wait, we could check date range. Perfect. Beautiful. Thank you, market. Let's check. I want to see last year. So let's see 2025. And I want us to start back in, we'll say August. And then from there, oh wow, we'll load completely. Fantastic. All right, perfect. Let's check that out. Didn't want to click that day. That's fine. We're going to find it. We're looking for, where is it? We're looking for, there we go, right over here. When markets were giving us this rally through November, through December, this is the market when the market was forward looking, when the market was pricing in rate cuts. We could probably click somewhere over here. I'm sure it'll say something about monetary policy, but that's necessarily what we're talking about. Let's see, tempered hawkish Fed supporting continuation of soft landing view. There we go, right there, guys. I just clicked a random candle throughout that entire few month span that I was looking for to give you an example, and that's exactly what it's talking about. And reinforcing Fed rate cut narrative. So at this point, the day that I picked, December 19th. Oh, December 19th. Okay, let's go even further back. Because even further back, we were moving higher in price because we were anticipating the Fed rate cuts. Before we even had any rate cuts, markets were moving higher because markets were pricing in a rate cut. So when markets know an event is coming, that's when we start seeing that stronger follow through, when we start seeing things get priced in. For example, another great example of more recent price action would be when we got the, is this more recently? Yes, perfect. When we got this reversal right here, we have this huge reversal from this downtrend we had. This isn't just a reversal for the sake of a reversal. This was, first it was started from our ceasefire, and then markets were forward looking and thinking the war was ending, so it continued on a very strong bullish route. We're able to see that. We're able to get those headlines and understand how markets are going to perceive them, because we want to ask ourselves one thing. With this information coming into the market, whether it's Fed rate hike, a ceasefire to a war, a peace deal to a war, escalations in a war, we ask ourselves, how can the market and how would big investors, I'm not talking $1 million investors, I'm talking $1 billion investors, how do they perceive this information? Are they taking it as optimistic, because great, the war's ending, things are peaceful, things are calmer. Great, we're getting a rate cut, things are going to be cheaper. This is great, amazing. And I want to invest. I want markets to move higher. Markets will move higher. So that's optimism. Uncertainty. Last year, was it? I think it was last year, 2025, when we had, it's not going to show on this chart right now, so I'll show you guys on the regular chart. Let's see if we could find, put this here, delete this out, put this here, and let's get ES back up on here somewhere. Oh, flashbang, sorry about that. ES, daily time frame. Last year when tariffs were entering the market as, hey, I'm going to give a tariff to this, you're getting a tariff, you're getting a tariff, you're getting a tariff. Markets sold off from there. Why? Because those big investors had no idea. It brought uncertainty. The markets had no idea, how are my companies, Amazon, Apple, Microsoft, how is my investments, how is my portfolio, how are these companies going to react to new tariffs? I know that new tariffs end up giving us, and we all know this is how they work, we all know that new tariffs make the companies have to spend more for imports and exports. Well, if that's the case, these companies are most likely going to see a thinner margin. They're going to see a thinner margin. They're going to see a thinner ROI, which is their return on investment with their products. Me as an investor, I don't want to hold through that. That's not optimistic. That's the complete opposite. That's uncertainty. That's worrisome. I don't know how it's going to play out. I want to take my billions out of the market. I want to let it play out, and I'll look for a better buying opportunity. Then what do we get? We get Liberation Day down here. Things are calming down. I'm putting a pause to tariffs for 3 months on every country except for China. And we got a 10% move in a single day on the S&P and the NASDAQ. One of the biggest moves we've seen in decades. It was wild, but that was our catalyst. I always tell you guys, markets need a catalyst to reverse. This was that catalyst. So very strong there. And again, this was now markets going from uncertainty to now optimism. And that optimism leads us to price things in. We get the headline that there's no tariffs for the next 90 days. Optimism, 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 leading into the next tariff deal, into the next tariff deal. So optimism, uncertainty, and optimism, uncertainty, and surprise. Those are the three main emotions markets like to move on. Guys, I believe, you know what, we might have our substitute streamer with us today. Let me send the recording, or the link, I should say, over to over to Nalab, and see if Nalab wants to join us, take over a little bit for Jeev today. But guys, drop some comments. Let me know what you're trading. I do see there's a few that I got to get back to. You can also call it the reversal, looking for 4082. Let's see. So let's take a quick look at the lower time frame. Yeah, 4080 right near our previous day high. Good resistance point over there. And something else to add with that area is if we do manage to break this recent high, then we can look for the longs, and we could actually look for the opposite, right? We could look for a breakout, break and retest, and target these highs, and also this 4100. Same with XAU over here. 4080, it's taken out on XAU. We return to 4077 to find support. We could target these next pivots of resistance, low-hanging fruit. Stop order, stop order, stop order. We want to see markets run through those stop orders. Yo, you got it, Elisa. Absolutely. Yo, PJ, 100%, bro. 100%. Always dropping gems for you guys. That's the goal here with Market in the Morning. Drop gems and make money. Yes, sir. Yes, sir. Yes, sir. All right. Good stuff there. That's a little rundown on XAU USD and GC. We can take a quick look at the S&P as well. S&P has really been seeing a lot more chop lately. And again, this is where the anticipation comes into the market. Right now, there's not enough uncertainty to worry the market, but we're definitely seeing enough headwind and enough uncertainty in that markets are waiting for economic data. And that economic data that they're waiting for today and this week is CPI. CPI will be tomorrow. So What are we seeing? We're looking at ES. We'll take a look at ES real quick. Then we'll cover some NASDAQ. Then we'll cover a little bit of Dow. And we will let the ball keep rolling there. Let's see. Okay, perfect. So what do we see on ES? We have a gap from last night. We gapped down, a little bit of a move lower. We know that this gap down was not for no reason. This gap down came because we had the economic news come out that the U.S. is attacking Iran. Iran is attacking the U.S. War tensions are picking back up again. So you do want to be a little extra careful with any long positions you take in the market today on the S&P. Same with gold. As for support and resistance, I don't really have much on ES, so I don't want to spend too much time on it. We can cover NASDAQ real quick, and then we're going to have our one and only Sonatoni homie, Mr. Nalab, join us today for our stream. He's going to give us some gold levels and some great price targets. As for the NASDAQ, I will be looking to see if price can return back up to 29,900 over here. We could update our opening price, which is over here. We're bearish on the day. Now, ideally, guys, I don't know if you remember, but from Thursday and Friday, I was looking for NASDAQ to return to 29,500. It did not do that on Thursday, did not do that on Friday. Here we are, Monday, Sunday, overnight. We had this move. We were very close, but we did not hit it still. So I would still like to see price return back towards this price level. That would be, again, 29,500 on NASDAQ. Very strong, very good zone there. Now we can take a look at the 15-minute time frame as well, see if there's anything of relevance. But quite honestly, guys, supply-demand-wise, I'm really not seeing anything that's screaming to me, this is a great zone. This is a great setup. So we're probably going to be extra patient on something like the NASDAQ today. However, I will keep an eye on this area right here. This zone right here is really a great spot in my opinion. A little bit of that inverse fair value gap plus fair value gap price action. I'm sure if we have our volume profile on the chart too, it is also going to give us a little bit of a low volume shelf right here, which is an imbalance in the market. Markets like to rebalance themselves before continuing. And it lines up in that supply area that, guess what? We drag it out. We see that this has been a really great resistance zone. So we found our level. We just wait for the reaction. We have two levels now we're looking for on NASDAQ. To the upside, 29,900, and to the downside, 29,500. That is giving us a 400-point range on the NQ. If you are trading NQ, you would want to trade micros on a day like today when we see that our range is extremely large. So that's NASDAQ. That's a little bit of S&P as well. We could take a look at the Dow. Take a look at YM. See how the Dow is doing. Wow, look at that. I don't know. Oh, yeah. Remember we set a previous day high or low. We'd look for the sweep. Look at that's funny, man. This was that big Trump candle we had out of nowhere. I don't know if you guys remember, but Friday we ended the stream. And yo, when we ended the stream, literally 10:30. We ended the stream at 10:30. On the 10:30 candle, we got this crazy wick move to the downside on gold, on NASDAQ, on the S&P. I'm sure you guys remember it. Because guess what? During this whole day, I was saying this is a no trade zone. You should not be looking for trades at this point. I even said if I was looking for trades, I'd be looking for shorts off of this zone. And then what happened? We got that crazy wick lower, 250 points on a single 5-minute candle. That is insane. But guess what? If you were long, it would have ran through your stop loss and the spread would have been so wide and powerful. Whether you were trading a prop account, you were on your own funded account, whatever the case may be, you would have lost way more than you have originally planned. And that's why, guys, it's important to know what days to trade and what days not to trade, because that could have really ruined your account and hurt emotionally and psychology. A liquidity grab for buys possibly because Friday was super bullish. Yeah, we'll take a look. Friday was definitely bullish. We got to remember, though, that we did have some new data come out since then with Iran attacking the U.S., U.S. attacking Iran. Exchanges and attacks picking back up again adds more to our geopolitical stance of, hey, we might be leaning a bit more bearish. Let's take a look. Iran says it will not pay enemy for ship passage. This was also, again, in a headline where I believe the U.S. said something about payment. Let's see. Yeah, Trump says U.S. to be paid for guarding Strait. Like, come on now. Guarding Strait? I thought we were blocking it. Let's see. I've been reading about how China's putting restrictions on retail traders trading paper gold. Do you think that it will have an effect on gold generally or not? No, probably not. Probably not. It all depends. A lot of times when something new enters the market or the economy, or there's some type of different understanding of how things are traded or received, we do get a mixed reaction. Something to add on to that, though, is we've been seeing, I don't know about you guys, if you're located in the US, there was something called the PDT rule, the pattern day trading rule. And basically what that rule was for brokers is that if your account is less than 25,000 and you're using a margin account, you can only take 3-day trades round trip in a full week. Now, that's PDT rule. Now they changed that. They took away the PDT rule. So instead of needing a $25,000 account, you could start with $500, $1,000 for options trading, stock trading, things like that. Not so much futures. Futures still requires a much higher margin. That's just because futures are a lot more liquid and a lot wider of range. But PDT rule is no more. We thought maybe that would add more volume to the markets. It really didn't, because there was already a little bit of a way around the PDT rule. And what that was is by having a cash account. So with PDT rule, basically what it says is if you have $1,000 to trade with, you use $900 worth of that in one trade. As soon as you exit, if you exit for profit for $50, then you would have $1,050 to trade with, because of the margin, it keeps rolling over. Whereas if you had a cash account and you started with $1,000 to trade with, and you traded $900 worth of that 1,000 already in the same day, guess what? Next time you close that trade or you want to enter another trade, you only have $100 to trade with that day until the next day rolls over and the cash settles. So that was how people were able to get around the PDT rule. Them getting rid of it did not add more volume to the markets. Everything still stayed status quo. We have to remember, too, from a retail standpoint to an institutional and volume standpoint in the market, retail is never going to be enough to really make that significant of an impact. Retail really makes up, I think it's less than 5%, probably honestly like maybe 3% at this point, of the actual total volume traded in the market. So very small amount because of how large those big funds are trading. Again, billions of dollars going into the S&P and NASDAQ every day. Even if we were trading millions, that's a fraction of where they're at. So just something to keep in mind and to consider. Got a nice headline there. We could see if that's anything of significance. Iran's top joint military command says Iran will not allow the U.S. to intervene in the management of the Strait of Hormuz. Okay. Will not pay. So again, these are all things we knew, but there's still things that might help progress, not help progress, but might progress the war and the escalations. If a headline comes out that Trump doesn't like, oh, what do you mean you're not going to pay us? What do you mean you're not going to let us intervene? Well, I'm setting up a blockade. My ego's too high. You can't tell me I can't do that. We are going to blockade it, and we're going to continue to, and then we're going to collect fees. Like, that could also just cause more escalation, more escalation. Iran does not want to give that up, nor should they. So really a lot to consider when it comes to that war front. But we're looking at the charts right now. We're looking to see a possible short position off of that fundamental analysis. And we'll take it from there, guys, right? Just wait for the reaction, read the fundamentals, and be prepared. All about being prepared for everything. Even right here, right? So it does say for a market terminal, NASDAQ 100 pressured as Gulf conflicts lifts oil, CPI looms. It does still say slightly bullish for our day trading and swing trading. However, what could flip it? Iranian Guard claims strikes on U.S. sites. We know that this is happening. We know we're getting higher conflicts. We know conflicts are rising. We know that they're attacking each other left and right again. And we also know that Nalab is joining us now, ladies and gentlemen. Guys, Nalab, good morning.
What's up, Kevin? Good morning, man.
What's up, brother? How are you? Happy Monday.
Thank you. Happy Monday, man. It's a fresh new week, new opportunities in life and trading. So let's absolutely smash it.
Bro, you know it, 100%. Guys, before Nalab shares his screen and starts giving us some great trade setups, don't forget to join our community, our Discord community. I'm going to send you guys the link right now. Join it, drop some screenshots, at me, at Nalab. Ask for our input. We're always here to help you guys become better traders. All right, Neil, what do you got cooking for us? What's cooking?
So I actually want to show you guys some stuff.
Yeah.
Before we go into all the analysis and what's happening with gold. Okay. So before everybody, I see a lot of back and forth happening, right? And this is across like the overall trading community, plus also on overall sentiment, because you see last week gold closed off quite bullish. And then over the weekend, escalations brought gold back down. But that doesn't necessarily mean that gold long term is going to continue dropping down to 3,800, 3,700. That's not what that means. It's we have to put everything in context of right now. Right now, gold has significantly dropped over 25% since the start of the year. The last time gold did this was a 2022 rate hike cycle. And after that, we quickly found a bottom because markets always like to price in events before they happen. One major event that we have coming up is US CPI. Tomorrow, we also, is tomorrow or Wednesday, Kevin?
Tomorrow's Tuesday.
No, I'm saying CPI, is it tomorrow or Wednesday?
Yes, tomorrow, right? CPI.
So CPI is tomorrow. And after that, later on this month, we have our interest rate decision on July 29th. And then we have NFP again. So you can see there's always an event that is influencing policy and economic activity in the market. So now let's say CPI comes out lower than forecasted, because that's what we have anticipated over here. And that's what the markets are really priced for right now, is that they're priced for CPI. This was 3.6, by the way. This minimum forecast was 3.6 few days ago. And now it's, sorry, it was 3.7. Now it's 3.6. So markets are already forecasting this to be a low one. So if this comes at below 3.8, comes 3.7, and it just misses the minimum expectation that they changed, that's going to show us, okay, inflation is cooling. But this is talking about inflation from like the effects of inflation from like a month ago, right? Or this price of oil hasn't trickled into this. Like you don't get crude oil's spike over weekend trickling into headline inflation, or even just this move doesn't get trickled into headline inflation for this release, right? It always comes in like a month and a half, 2 months down the line. So just getting back to what we're talking about, inflation comes out lower than expected. Markets are going to front run that rate cut. You're going to see gold long-term setup for that move towards the upside, but that doesn't mean it's going to have to start right at CPI. What I'm saying is CPI just adds further confluence to what I want to see long-term on gold. I understand as a macro, what I'm expecting here is a massive shift in the macro environment, is a change from markets pricing in rate hike bets and higher rates for longer to completely shifting to pricing in rate cuts and the Fed going on another cutting cycle, whether it be later this year or early next year. That's what I'm anticipating. And I know from my experience that moves like this can take months to set up, that it takes one specific event, like over here when we had the Jackson Hole Symposium, August 22nd, 2025, which led to the next 3 rate cuts. But the markets front ran it this entire move before we even got the first rate cut. So now you start to see a painting that I'm painting here. You can call me Van Gogh of the markets. You clearly see there is a demand area over here. And what an amazing time for gold to come into here with midterms around the corner, inflation cooling down. If oil now fades this move, then we're pretty certain that, okay, the impact of the war is not there anymore. Like it's barely lasting. It's just you're getting these little intraday spikes. But maybe if this starts getting faded out and oil starts heading right below back to the bands of 50s and higher 50s and lower 60s, guess what? The war is basically priced in. What do you think is going to happen to inflation? What do you think is going to happen to gold? Gold's going to set up for that shift in the higher time frame where you're going to see macro positioning from the short side unwinding. And these types of moves play out over a course of quarters. This was August 22nd, 2025, and the peak was January. This was a 5-month play where we rode the same sentiment. This was rate cut bets being priced in. Right? This was rate cut bets being priced in. Over here was Trump. Right? Trump tariffs. And then we had over here Iran war, inflationary fears. And guess what? What do you think is going to happen next? What's the next catalyst going to be when this falls out of focus? It's going to be rate cut bets, because there's going to be no need to hike rates if inflation comes down. This is, that famous saying from 2020, 2021, 2022, when Powell would be like, inflation is just transitory. Every meeting, he'd be like, inflation is just transitory. And guess what? Inflation was transitory. Inflation went from 9.4% to 3% in a matter of a year, 2 years, because the Federal Reserve hiked rates. This was the rate hike cycle. And after that, the market started pricing in cuts. The market's always pricing in an event. If it starts to lose focus on an event, there will be another thing that comes into focus. And all we have to do is pay attention to the data and how it paints this picture. Because if we can understand this picture, I can now start theorizing moves like this that I can take advantage of, just like how we did for the sells. This is exactly what we did for the sells. We said, hey, inflation is going up. So this means markets are going to price in a tighter policy, higher rates for longer. What do I know about higher rates? I know that gold significantly outperforms and sees massive outflows when rates are higher for longer, or when markets are pricing in potentials of rate hikes. So it's the exact same play that we went through here. Now, when I see somebody replying to me, some low IQ individual replying to me about how gold isn't going to go up on rate cuts, it goes in from one year and out the other for me. Zero energy wasted. You have to have your own conviction. This is my conviction. I'm not asking anybody to follow it. I'm just telling you what my outlook is on the market for the coming quarters. And I like to think on a more long-term basis, because I see the shorting that's happening. And keep in mind, I milked this run. I absolutely performed my best I ever have in trading on this run. So when I start to look for shift, I have to be a bit more patient here. I know that the potential of us doing something like this and coming down to these lows is still likely. Like, market just doesn't push up after reacting to an area once. There's likelihood that we tap back into here, and then we see that change in structure occur that takes us towards the upside. And guess what? We're going to ride it up. We're going to ride it up to 4,200, 4,400, 4,500, all the way back up to 5K. And I'm going to be patient, and I'm going to stack my positioning when it comes to this. When this positioning starts to unwind and the short side gets unwind and we start seeing those squeeze towards the upside, it's going to be similar to this, where the moves on the downside are so much more volatile, and then we get that consolidation, and basically every pullback gets faded out, right? Once you start seeing that, where every pullback gets faded out, now we have one-sided volatility, and we have clean moves that we can capitalize on. So guys, before I get a little further into this, we're releasing our official trading extension. It's a full launch. We're doing a launch stream for it as well. And what I want to show you is completely separate than this. I'm just a little excited. I'm a little giggity on Monday morning. I slept pretty nice last night. So I'm going to go to this environment. Ignore this. Ignore what I'm doing right now. This is our dev environment. So this is where we get to have a little fun.
Guys, close your eyes.
Close your eyes. So what you're seeing here is two things. You see ask market over here. You see ask market over here.
Ooh.
Now, I just want to say, your boy engineered this. Me, myself, no other help from any other engineers on my team, did all of this while doing my little CEO activities on a day-to-day basis. And I did this in a few days of 18-hour days. So the engineering that went behind this is all me. But what I wanted to build wasn't another text chat box, because I think those are fucking useless. What I wanted to build is something that can return to us elements of market, features of market. So things of such nature, like if I go to bias and levels, I can get gold day trading bias. If I want to check what happened on the last NFP, I can click that and it'll start doing that, right? So what it starts to do, it starts scanning the US economic calendar. I'll find the first exact date, and then it starts preparing candle analysis. The most recent one was July 2nd, 2026. And guess what? Now it's going to show us the candle analysis move that took place. Gold short covering and bullish continuation around US jobs data window. Gold in recovery phase after multi-month low below 4K. Hourly trend bullish with price reclaiming 40.60 to 41.20 resistance band. U.S. labor market mix, slightly softer growth and higher employment. So look at that. Wow. This is not text. This is pure market headlines, market events that are sent to you. You can analyze it and you can have follow-ups too. So certain ones that I was playing around with was any data that might affect the euro, last jobless claim, latest CPI numbers, and how gold reacted. You can get complete, if you want to check about top movers of the day, what's moving gold, month in a review. If you want to get the playbook for CPI for gold, what's the CPI playbook for gold? So this now starts scanning. It looks at all of our tooling that we've built internally. So it doesn't go like ChatGPT does, just searches a random blog. Now it's building the playbook for gold. And this is what's important here. So see, CPI prints tomorrow, forecast is 3.8 year over year. Here's your playbook for gold now. Do you see what I mean? This takes what no other company in the trading space has been able to do. These, by the way, these guys have millions of dollars. TradingView is $1 billion company. And you have a hungry man in his late 20s who's so committed to building the best company that he's doing this on his self. So now I can also switch this for my other assets. If I want to see the playbook for gold or for a dollar, guess what? Here it is. And we know the opposite correlation exists on US equities, because if higher inflation means higher rates. So anything above a 3.9 or 4 is bearish for US equities and also gold. So NASDAQ, ES, gold, bearish. Bullish for gold if it's higher inflation. Now, this is just a taste of what's coming. You can ask for the gold a 1 hour chart as well. So it'll show you the 1 hour chart. It will see rendering the 1 hour XEU USD is just above 40.64, slightly bearish and traded bias, and it shows it to you. So this is still in works over here, but we're really making this easier for our users to come to. Oh, you want to know top movers today? What are the most market moving headlines today? It'll catch you up to speed. Now find me another trading company that has done this. They will just spit out text on you. I've told you this from day one, guys. I told you this from day one. Our entire focus is to make the markets easier for you, right? And what that revolves is not us bringing all this data and dumping it on you. Nobody wants that. If you're a user and you're paying for a platform and you're left to figure out what the fuck I'm doing here, you shouldn't be paying for it. If that's an issue for you on market, please reach out to me ASAP. I'll drop my email below. Please reach out to me ASAP, Kevin. If you can just drop my email.
Yeah, bro, guys, you said drop your personal cell number in the comments.
Yeah, personal number, social security number, and home address. Feel free to drop this email, man. I don't care. If anybody wants to reach out to me, reach out to me. If you want to book a meeting with me, book a meeting with me and give me feedback. If you think this platform is hard to use, please let me hear it, okay? But this is what the goal is. We don't want to build data dumps. That's always been our priorities. We build something where users can continuously come to see what's going on, and I think this really ties it all together. So I just want to say a few select users, our strong cohort of users, are going to be seeing this very soon later on this week, okay? One thing I want to preface is this is going to be in beta, because this, if I let this go with unlimited usage, it's going to bankrupt my company. And I can't afford to do that because this feature costs a lot. So what you're going to see initially is you're going to see a daily limit that you're going to get. But we are trying to work around it. It's just a unit economics thing that we can't let you have an unlimited usage of this because it costs us a lot. Like, I was playing around with it over the weekend. I did about 400 something conversations and I racked up a pretty heavy bill for myself. So I can't do that to our thousands of users. It would completely shut us down. But everybody's going to get access to it. It's going to be in beta for a bit. We're testing. We want to get some feedback. Yes, you know what, Kevin, is it possible if you could spin up a form or something?
Yeah, I got you. Give me a second.
Yeah, this is just for like some beta user access. Thank you, man. Fine, let's just get back to, I'm done showing this now, so I'm going to cancel out of here. So let's just get back to it. That was a fun one. Like, I'm very excited for that, man. That official launch is going to be first week of August. And yeah. Well, it depends. If our day one users want to PayPal me $100 right now, I'll put them on the list. No, I'm kidding. I'm kidding. Right, man. No, it's going to be a soft rollout. So people will get it. People who have been using Market a lot will get it. Our core users will get it. It all depends on how you interact with the platform. If you're continuously clicking buttons, if you're continuously scrolling, like, we track this, right? Like we track your usage on how often you click stuff. And also, like I mentioned last time, the way you interact with market is completely changing. And that's just one element of it. The rest of it comes here. This is completely changing as well. And it's changing faster than people can fathom, faster than these companies can fathom. We release something, the other companies catch up from what we did 9 months ago. Congrats, buddy. Like, you know what I mean? Like, let's put some effort into this. So back to the markets, because that's also what we do here. Not only do we build cool trading products and tech, but we also call out pretty banger trades, right? Like the ES call from last week over here, which ran the whole week. We mentioned, Kevin and I mentioned on Monday, don't buy into this because of this area to the left. And we got that pullback to our demand area over here. So patience game. I'm not looking to buy here, to be honest. I'm looking for these larger moves. And to me, what I see right now would be perfect in my eyes is if I can see ES around open or 10 a.m., whatever, break below this wick over here, and we come down somewhere here and we maybe break a bit below, snap back above, and we can head towards the upside. I would like to see similar price movement like this, where you see that pullback and then push towards the upside. You see this, we anticipate that pullback, push towards the upside, anticipate that pullback, push towards the upside, right? That's when I perform the best. It's, you have to know when you perform the best. I don't perform the best if I'm staring at the charts, prices up here, and I'm looking for breaks above here to look for buys. I already know at that point, fucking buyers are in from down here. Like I'm just catching the worst part of the move. Like I am a bottom feeder of the ocean if that's the type of plays I'm catching. The plays you want to catch are the more larger intraday moves that happen over a course of a few hours. Sometimes they can happen in a few minutes, but market just moves way better on a higher time frame. So less stress for me. I enter a position, nice stop loss, take profit, good risk to reward ratio, and let it play. Let it play. Let it do its thing can also be the harder thing to do at times, but it is also the right thing to do.
That's right.
It's not to be glued to the charts, not to be always focused on the 1 minute time frame. But I use the 1 minute to execute, but I'm not glued onto it for the next 4 hours or 6 hours while I'm watching, while I'm in this trade, right? So that's what I'm looking for right now, is that I'm going to start observing how ES reacts around here, right? And I'll ride that towards the upside, or back around this area as well. And of course, any lower demand zone can also be tested, and we'll just observe and watch as those come. But the point being that I don't think these escalations are going to hold weight. I think that we are going to fade this move on oil, whether it be we push up a bit and fade it out, but every other escalation recently has been faded out on oil. And oil's been, we told you from the start of time, not the start of time, but at the start of this war, that oil is the biggest telltale sign for what's happening here right now, what's happening on the war front, is that all these escalation over here got faded out, escalation here got faded out, right? Escalation here likely to get faded out. So that's the type of plays that I want to watch, is that I want to watch the direction of oil. This is going to tell me how dollar behaves, how gold is going to react, and where ES is going to go. If oil starts fading this out, I know that every pullback on ES is going to get bought up, and we're going to continue towards the upside. And how fantastic is this going to be for Trump if oil comes back down, rate cuts are being priced in? Where do you think ES goes? Do you think ES goes down? ES goes, US equities go up. You know, if I could explain it in monkey terms, rates go down, stock market go up, right? And that happens before because of front running. Since market participants in the US stock market are just greedy crackheads with capital, these guys will front run the move before it even happens. So before we even get the start of the next series of cuts, the markets are going to front run the move.
Perfect.
There are tens of tankers crossing the strait currently, not as much as pre-war, but it's obvious the strait is not closed completely. Some negotiation happening, it seems. Yeah, this has largely been the case since the start of the war, where it's hit, one side says closes it, the other side says it's open, but they're still free flowing. And a lot of these ships also have their GPS spoofing, so it's not the accurate number that we're getting as well. Guys, Kevin just dropped a link in the link for the form. If you can fill this out, we can consider you to be one of the beta testers for this feature. And what that would require is you would have to hop on a call with someone from our team at the end of it just to give us some feedback before we release it for our official release. And that's something we appreciate. So if you're able to do that, please sign up. If you're not, I suggest you don't sign up because we're really looking for people who can help us make this the most cracked version of Market AI. But yes, lots of cool stuff coming, man. I'm very excited. When I said it was going to be a hot market summer, man, I meant it, both in trading and in actual building the platform. Like,
let's go.
So that's what we'll wait for, because the markets are positioned for CPI right now. So I'm on the sidelines too. Like, one thing I really wanted on gold, and I'm going to just quickly show you guys. Okay. So I love when data points towards something softening and we get, and this is important. Okay. I would love for everybody to pay attention right now. Guys, if you have kids and they're watching TV, turn that TV off. Tell them to come over here. If you have family in the kitchen right now, tell them to come here. We're going to talk about some cool stuff. So CPI is forecasted to come down. Let's focus on this. 3.6 is the minimum. It was previously 3.7. Maximum is 4. Prior is already above the current maximum expectation. So we know it's going to come down. We know CPI is going to come down. They're forecasting 3.8. Both like retail forecast and the bank forecast are medium forecast is 3.8. Okay. Now we know it's coming down. Now, when that happens, usually the markets will set up for that play before the release. So in terms of gold, T minus 3 minutes. Yeah.
For New York session.
I was like, what? For CPI?
Oh, no.
No, yeah. So when we know something is about to come lower, in this case, CPI, so I've seen a lot of times is markets set up for that play ahead of time. Meaning if CPI is coming softer, why wouldn't gold buyers set up gold buys from here? So by the time CPI comes out, maybe we're back up here. CPI comes out softer, boom, we get that spike towards the upside. And now this looks like a range fill. You understand what I'm saying? You understand what I'm putting down? So this wouldn't be a bad area, in my opinion, to test out like intraday gold buys. Where you'd want to be a bit careful is at the fact that we could push lower. And if we push lower, I would love for this low to get taken out for us to test this demand area again. And that's where maybe we could get that CPI buying take place. But this is not a bad area for an intraday trade. If you were looking at the 50s, 50s over here at like 6 a.m., we got that retest. And this is where people get a bit confused, is that overnight we've had that selling pressure. And we know we're currently bearish in the day trading because of it. But this could change because of how markets move. Markets don't move purely on just facts. They move on rumors. They move on anticipation. So if the markets are anticipating a softer CPI, they'll start to push up beforehand. And then you'll get CPI just looks like, oh, it just continued that play. Whether this happens in Asian session, whether that happens now. If we don't get this and we instead start pushing towards the downside and you get that retest, once we take out these lows, if we take out these lows, first of all, and we push a bit lower into this area is the first area I'm going to be watching, because gold loves this. Gold loves breaking these previous lows right above a demand area, faking it, and boom, taking out those lows, taking out that liquidity, and boom, pushing towards the upside. So if something like this happens, the lower gold goes in here, I'm looking for buys. I don't care what you guys say. I don't care what Joe is saying on Twitter about selling gold into 3,200. I'm looking for buys if we come into here. The reason I'm looking for buys, I stated my thesis over here. My thesis is purely macro and geopolitical based. Once those inflationary fears die out, rate cut bets are back on the scene, just like how they were here, just like all these monstrous moves that took place. And guess what? I'm going to be riding every single one of these pullbacks. And that's what I anticipate to do, whether it happens from here, whether, for all I care, gold pushes down to here and then pushes up. Guess what? What do you think is going to be the same catalyst driving it? It's going to be the rate cut bets. So that's what my focus is. And that's the type of trading that I love doing the best, is where I can see the picture being painted. I can see inflation coming down, just like how we saw for the past few months, inflation going up. And we anticipated inflation going up all the way from March April, May, June, we also rode those gold sells. And look at the monstrous moves we caught. Like, you guys aren't fathoming. These are 3,000 pip moves. These are $300 plays on gold that were called out live. By the way, this entire move was called out live. We called the short right over here where this entry is. So monstrous move because of the macro regime. Now, if the macro regime starts to shift, I want to be aligned with it. And I not only do I want to forecast it, but I want to make sure that I'm executing on it at specific areas. Like, one thing I don't want to be doing is having this idea that this is going to happen, and then all you start doing is buying every pullback. You don't want to do that. You want to be very strategic with it. One area where being strategic is this is possibly an area where we could bottom out because of upcoming softer data, right? Softer data that's pointing towards inflation going down. If inflation goes down, that's bearish for dollar and bullish for ES, right? That's bullish for ES and bullish for US equities. So that's one area. And then the other area is in these lower bands of this demand zone. Why? Because this area is a very, very good demand price point. Like, it is a cheap area when you're looking at compared to 5,600 that we topped off at the start of the year.
Yeah.
So gold has very rarely done these massive outflows. A lot of the time it's been, well, all the time it's been because of some major catalyst event that takes place. So that's my thesis. Kevin, do you have anything to add there on ES? Again, sorry, just to go over this. We're 2 minutes into open. I'm looking for this, guys. I'm not looking for a break above here to ride it up. For all I care, it happens. I told you how I perform best. I perform best when I'm trading the pullbacks. And to me, that gives me an advantage because I have a target towards the upside. I have a higher probability that price fills that range. And I'm also not going to be flustered by my emotions and look for buys at the highs over here.
Yep. No, it looks good. It looks good. I agree with you. Once we do get a cooler inflation, we get rate cuts back on the table, markets are going to feel that shift and it's going to be strong.
Yes, sir. Absolutely. And once markets do feel that shift, man, it's exactly what you said. It's going to be strong. It's going to be instant. Very strong. It's going to be just like how that shift was on Jackson Hole Symposium. And whoop-de-doo, we have Jackson Hole Symposium coming up very, very soon. Like, Jackson Hole Symposium is next month. And guess what? Majority of the pivots have been on Jackson Hole Symposium. You guys can backtest this. I'm not just speaking out of my ass. I can promise you this. I have experience trading macro. I have experience trading all these moves. I'm not just someone who comes here, speaks out of his ass. I have proof for all my trades, all my losses, all my wins, withdrawals. So this move here, look how that front right. I love this example so much, Kevin, and it's purely because it really shows someone who's not new to fundamentals the impact fundamentals have. Is that one candle, what happened in a 10-minute speech, set the sentiment for the next 6 weeks, which led to a 30% increase in gold prices. So now, as soon as we get that shift here and we get data that points towards it, we just need that one speech that says, guys, cuts are coming, or just hints towards it. I know Warsh said he's not going to give forward guidance. The hell with Warsh, I say. The hell with Warsh. Send him to prison, man. Give us our forward guidance, buddy. This is shit that Alan Greenspan back in the day was like, yep, we're introducing forward guidance, right? Paul Volcker, forward guidance. He's like, we're hiking rates by 800 basis points, 700 basis points. Like, buddy, stop taking away tradition. Let the markets do their thing. Let us be greedy. So massive shifts like this occur. But I'm not here to call the bottom. I'm just anticipating what could happen. The market's going to do what the market wants to do. I learned a lesson last week, and market taught me a lesson. So I'm not here to call out a bottom. All I'm here is I'm trying to explain to you that shift is going to occur. And when it occurs, it's going to be because of something like this. Apple hit all-time highs. Man, yeah. I'm loving my Robinhood positioning. My Robinhood positioning is eating right now.
There you go.
Yeah. This is I keep talking about this. Robinhood is a $200+ stock. I wholeheartedly believe in it because of the founder. And I've been in Robinhood since 33, 32-ish. But yeah.
I think
Robinhood all-time highs.
I think, yeah, Apple's all-time highs. I think Robinhood needs like one solid update, like brand new update. Here's a new trading platform, state of the art. Here's order flow. Here's a bunch of tools, so they could sort of compete with Interactive Broker. With
Dude, I didn't even think it's a competition. I think a lot
no.
of the stuff Robinhood is doing is way more revolutionary than just the trading platform. Like Robinhood has done complete tokenization of private companies, and they're also building their own blockchain infrastructure. Like they just released it to I think their European clients. So a lot of their innovation is coming from stepping on boundaries of the financial markets as a whole, like creating new derivatives. Like just like how prediction markets created a whole new financial derivative.
Yeah.
These are like the front runners of the new financial space, like Kalshi, Robinhood, all these companies that are pushing the boundaries of different types of derivatives. Yeah, right. Robinhood did launch their own blockchain. Yeah, volume is booming. Exactly. So Robinhood is actually going up against like big giants like Binance for like let's say crypto, and yeah, even like companies like Hyperliquid are one of those like innovators in this space. Hyperliquid, any of the prediction market ones, the main ones, Robinhood, these are the brokerages. Sorry, the companies that I think are going to last time. Interactive brokers, fantastic. I think one of the best brokerages to trade on, right? Regulated brokerage. Most countries you can just completely trade on it. Beautiful layout. But I don't think they're innovating as much as some of these other companies. Those are more like solid proof companies that clients have billions of dollars worth of capital in. So they're just forever good.
Right. We had a question.
Dude, yo, hold on. Somebody said Robinhood will buy Market AI. Watch the space, man.
That
Fuck
would be
yeah!
crazy.
Thanks for putting that out there into the universe. That's an ideal. I'm not even lying. That's an ideal exit. If a
That's
company
fire.
like Robinhood comes, see the thing is we do everything. What we do great is like intraday swing and showing users what happens in the market. If a bigger company comes to me, hey Nalab, we'd love to buy you out, have your team work with our team. Fuck yeah, man, let's join forces. So if anybody's ever listening, if this ever ends up on some executive's desk at TradingView or any of these
Never
larger
know.
companies, and you want to shoot your boy an offer, I'm not cheap, but I'll negotiate. I'll negotiate. But I start at 50. I start at 50 M's. So if you want to buy my company, just come with that number.
There we go.
But getting back to
He's
this,
undercutting it.
I know, but hey, listen, if somebody came with 50 million, I'm gonna take that 50 million. I'm gonna take that 50. It's because the downside is also just as big.
Yeah,
It's your downside is zero.
that's
And
right.
if you get an offer that high, it's sometimes best to take it because that offer means either you take this or we compete with you and we build what you're building.
We had a question. This guy was asking a couple times. What confirmations do you look for before entering a trade in your zone?
Absolutely, bro. Let's go right over this right now. So let's go through this in a few examples, and let's not hold any preconceptions. Let's just pretend like this is our first time seeing this price action. Okay. So what I see happening here is cool. I see gold pushing down. Let's just pretend, okay, we know, and we're gonna put emphasis on the fact that this is a big higher time frame demand zone, and it is because gold has bottomed out. So now what I start noticing is, okay, we tried to make a high. Okay, we pushed here, we made a lower high, we pushed right back down. We're coming down here right now, and let's say you're watching the 1 minute time frame. Now, what I'm going to look for is how price reacts to this area. And and let's say I'm looking for buys. Let's say I wrote down that I'm going to look for buys over here. And that's something that I wrote to myself, look for buys. Okay. That's something I wrote to myself, let's say 30 minutes before when I came to my desk. Now, what I'm going to look for is I'm going to wait for price to come back to this area where we previously found value. And I'm going to see what happens, whether we get continuation below or whether we start to see that shift in structure. Now, if I start to see that shift in structure, it's going to be very obvious because we're all of a sudden going to go from making lower highs and lower lows, like how we were here, right, to now bottoming out. And you'll be able to see that because once that bottom happens, you get that reversal. You get those higher highs and higher lows starting to print. And that's your sign that any one of these points becomes your entry. Is that once you get that shift in structure, remember, it all starts from the lower time frame. It all starts from 1 minute and then it trickles all the way back up. And then Afterwards, at the end of it, guess what ends up happening? On the daily time frame, you end up getting that shift happen, right? So in the lower time frame, it's no different. If price is coming to my higher time frame area or my demand or supply area, and I'm in this case, I'm looking for buys, I'm going to wait for price to come and start to shift. Whether that is clear indications here, here, breaks back above here, retest, you can see each one of these are valid entry points in the lower time frame because you see that shift happening from creating lower lows, lower high to now shifting from a known demand area, right? So you want to watch how price reacts. A lot of times, if you get in on the first reaction, market's going to come react to that area again. Very rarely do you see one candle dump and then all of a sudden we get a reversal and we never come back to that price point ever again. Very rarely does that ever happen. So in this case, now we have gold pushing down. Let's just speed this up a bit. Right? Now look what happens to gold. Let's pause this here. So gold starts shifting in that structure. We bottomed out here, bottomed out, started shifting. As soon as we came back above 39.75, you can see those higher lows holding, higher lows, higher lows. We got to push towards the upside. So you want to wait for that change in structure. It's the same thing that applies, and I'll show you, to when you're trading the sell side. When you're trading that sell side, you're not just taking the first spike, right? Like you're anticipating what could happen. In this case, we had fresh sentiment from FOMC that rates were going to remain higher for longer. Okay. Now, look how this plays out. You have this area marked out on your chart because that's the last time we got reaction. This is the first reaction, but the market starts topping out here. This is where the market starts topping out, but you get several reactions in the same area. But keep in mind, we're not breaking above this point over here, where sellers are remaining below there, but you can clearly see reactions and several reactions over here where the buyers are exiting, sellers are entering, those lower highs are printing. So now, if we come down below 4,300, that's clean sells for me. I can ride that down because we had that shift in structure now. We had a shift in lower time frame structure from these lows, creating these highs over here, causing this retracement post FOMC, which is normal. And then the following daily candle just completes that entire move because now that structure is back to alignment with the intraday bias. Right? Same thing here. If I see gold dropping to these lows, what do you think I'm going to do? Like in this case, gold right now is dropping to the lows. What do you think I'm going to do if the market now comes all the way back to our demand zone here? Do you think I'm just going to look at it buys on the first glance? No, I'm going to drop into the lower time frame. I'm going to do exactly everything I did here, wait for that reversal to show me. And that reversal comes exactly how you get that change in structure. And once you get that change in structure, that's when you align. That's where your optimal entry is. Your optimal entry is not on the first tap of that zone. Yes, you'll hear me talking about, hey, sometimes I just take that trade. I take that positioning if the market's at my price point. That's fine. A lot of times I'll have that conviction in a zone like this. And in all honesty, if price was coming down here, I would just buy it. Like I wouldn't wait for that confirmation because I know my stop loss is much lower. I have a much larger stop loss for a trade like this here than for something like this over here. Because this is a much deeper zone. I know my profit is like my risk, my target up here is at 4,200. Like that's what I would be targeting there. So that's a little how we look at lower time frames. I used to do these webinars in Capital Hungary called optimal entries. And that's how I really refined my trading, was to look for these optimal entries. And just like how we call out these trades, like that's also how we've been able to call out massive plays, right? It's because we not only take the lower time frame trade, but we align it with our overall bias, right? Like our overall structure and fundamental macro shifts that we're playing. And then what ends up happening is you end up getting moves like this and end up getting trades like this, where what a lot of people were waiting for here, they were like, hey, no, gold. Remember this, Kevin? A lot of people were like, gold's going to push up. Gold's going to push up because we bottomed out. And all gold did was sweep these highs. And as soon as, if you go to this stream, like you'll be shook. Like we called it out as soon as gold pushing up here. I said, guys, we're going to get a fake out. Either we push up to 75 and get the sell from there, or we get it here. As soon as we close back below, we enter that sell. and fucking whoop-de-doo, that shit went 3,000 points, 3,000 pips. So that's an optimal entry aligned with overall macro sentiment and macro structure.
Beautiful, man. Great analysis. Great breakdown. Guys, make sure you run that like button up, bro. We're close to 75. You guys are goats. We're a community. Don't forget, guys, fill out that form. Let me see if I could find that real quick one more time for you guys to fill out if you haven't already. Copy. All right, guys, check that out. Nalab, I got a request for NASDAQ. You mind if I cover that real quick?
Of course, man. Sorry, I'm just in the middle of some work stuff.
No, bro, you're good. You're good. And Neil, thank you, man, for jumping on today. I know we were supposed to have Jeev, but I told them before, you know, you could, like the band Outkast says, you could plan a pretty picnic, but you can't predict the weather.
Oh, that's
so
nice,
we try to get him on, but sometimes we know he's a busy guy.
You know, we're here to cover for each other. That's what good teams do, right? We make
right.
up for when one person can't show up, the other person steps in. That's what a good team does.
Beautiful. That's right. That's right. It's what it also puts market ahead of everybody. We're all a bunch of hungry young guys trying to build something amazing. All these other companies, Benzingas, Trading Views, they're built. People are just clocking in and clocking out. They do not care. They do not care if it does better, does worse. They're just clocking in. We at Market, we want to do better because we want you guys to do better. We want to keep growing because we know there is no end game. It's just continuation on the updates, stronger and better updates coming out. All right, real quick on NASDAQ. I'd like to see some support. We just swept those pre-market lows. I wouldn't be looking for shorts at this point. I do want to look for possible longs between 29.4, call it 440, and 29.530, about a 90-point range here on NASDAQ. This was a great area that was resistance in the past. Here we come becoming support. Would like to see if we can find some support down here. ES was also a little bit of divergence on that side, where the S&P, take a look at the S&P right here, guys. I'll remove these drawings. These are some setups I was looking at. S&P's holding VWAP. NASDAQ trying to come to support too. A lot of people saw that first move off the open and are trying to chase shorts right now. So we don't want to be getting caught on the wrong side. But we also don't want to be trying to grab longs every little wick we see, or else we would have tried a long here, got stopped out. We would have tried one here, got stopped out. Don't be the first buyer. Don't be the first seller. In trading, we don't want to be the first mouse. The first mouse gets snapped by the mouse trap. The second mouse gets the cheese and is happy. So don't get caught in the trap. Wait for things to be smoother and wait for others to get trapped. Good morning. What did I miss in the lab? Redo the entire analysis and send signals, please. Bro, Seb is great. Seb squared over here is great. No lab, did you know? I didn't realize Seb TFX was a different Seb from the
Seb. It's a different Seb. Bro, they're both my friends. Yeah, the different Sebs. Yeah.
Bro, it was the funniest shit. We had Seb on last episode, and this Seb was typing in the chat, and I'm like, I'm so confused. I'm like, how is he talking?
Yeah. And this Seb is one of the best traders I know. Like, this Seb, he's asking for my analysis, but this Seb is the guy I go to ask for his analysis.
Oh, that's fire. That's fire. Yeah. We'll have to see about a special episode bringing him on.
Oh, 100%. He'd love to come on, speak some facts. We can definitely get him on this week or something.
There we go.
Step up. No, I'm kidding. He's an amazing trader, great guy. Learned a lot from him too. So that's what flowers I do as well. I think Jeev, number one most impact, and then Seb also had a fantastic impact on my trading as well.
Oh, that's awesome, man. You guys are getting some high some high praises over here, Seb. You got to live up to that.
You got to come out and call out some trades. Go. If we see gold continuing to push lower and this change in that structural bias hold weight into CPI, I'm still going to look for shorts down here, man. I don't know what to tell you guys. I'm still going to look for shorts. So that's where I'm. Yeah, G walks so we could run. That's very true, man. yeah, that's very true. Guys, do you know what the butterfly effect is? Do you know what the butterfly effect is?
Of course.
Where if you hold open a door for a lady, like an old lady, maybe the price of Bitcoin reaches $150, 150K, right? Like that's the type of things that sometimes happen in life where you meet someone and your life completely changes, or you get in touch with someone and your life completely changes. And you may have just gotten in touch with someone because you were in a random group chat with 600 other people and you guys connected. You know what I mean? So you should always look for those types of opportunities in life. And it's very rare, especially if you're a man. No one really gives you opportunities. Either you have to create it or you align yourself with people who are generous enough to give you opportunities in life, right?
Yeah.
And that's what brotherhood is. That's real brotherhood, where one person elevates and he wants everybody else to grow with him and build something much greater. That's something that I was given to me like an opportunity, and that's something I've always tried to give to other people, because what goes around comes around. If someone puts out their hand to bring you up with them, guess what? You got to do that with 10 other people to bring them up with you. You get what I mean? So gold is continuing to push lower. We're getting that push towards the downside. I wouldn't look, I don't want to see these types of buys. I would love for us to push a bit lower, even like 4,010s, 4,000 before we get that buyer bounce. I do think that this move towards the downside is the geopolitical spike, but it's going to get priced out. And the reason I think this will get priced out is because I'm watching crude. And if crude starts fading this move, if crude doesn't sustain back above like 80s, because that's really the last band of price where we struggle to maintain above. If we don't maintain above 80s, crude is still bearish, right? Escalations here got faded. Escalations here got faded out. So if this continues to get faded out, price of inflationary fears start to die out. You're going to start to see that inflows into gold, but where are they going to come from? Either from these larger demand plays, or once we see CPI, pre-CPI set up, maybe later on to this new daily candle, we push a bit deeper and it sets up for CPI. So that's what I'm looking. Again, on ES, I'm looking for these pullbacks, man. I would love to see either we push into here or into this band of price over here. Awesome. And on gold, yeah, see gold just flip-flopping around this area.
That's awesome. We got any webinars or anything coming up? I think we could share with the folks. I know we have that.
Yeah, we have our launch. Me and Jeeve will be hosting this stream. Kevin will have to teach us dinosaurs how to do this, because we are.
I could be on the back end. I got you guys.
Yeah. No, that'll be fun. So we're doing that, and then we're also, the next big launch after that is going to be our market assistant, and that's just guys. Like I just can't keep sharing. Like I love sharing this.
That's so
because
cool, bro.
I want. Excuse me, because I know there's some competitors that watch these streams, and I want them to know what's coming. I want you guys to look at this, you little weasels. This is a call out to you. I'm talking directly to you. You little weasels hiding behind a screen thinking you're building some revolutionary tech. You're not. You're years behind. This is the demise of you. You better start rationing the food for the next 6 months, because things aren't sunny and optimistic for y'all. So this is going to be the main front and center every access point in market. You will be able to go into here. I'm going to bring up that comment right now, but you'll be able to go in anywhere and reference it. So the reason we took away the brain icon, it's purely a UX thing. Like brain icon. Yeah. So brain icon, everything's replaced by these sparkles, right? You can see that this is also like the universal right now AI logo that people use. Like Gemini uses it. It's because it's just become known that if users see this, they're more inclined to click it. When users see a brain icon, they have no idea what the fuck that means, right? So that is purely a decision. Like I would love for that to be there, but you got to realize, like, the point is users being able to use and utilize everything on the platform, connectivity, like what happened here, right? Like things like this show up when a candle moves big. Oh, what happened? And then we can analyze it. So things of that nature. Bringing it all together, ask market. You can ask it anything, geopolitical check, bias and levels, calendar, this week's big prints, top high impact US economic data. And then it starts scanning the calendar, right? Preparing your results. CPI drops tomorrow. Initial jobless claims, retail sales, Michigan sentiment. And then it starts building those playbooks. So you can then click, oh, CPI, huh? Let me see CPI playbook. Show what's the CPI playbook, and then it starts building the playbook for that. You can continue asking these follow-up questions. So here's the playbook for CPI. Anything higher than 3.9? This is where most companies And most founders come, they see this text, and they're like, holy shit, we built something revolutionary. And they're so happy with the 10 hours of work they put in, and they're ecstatic that our users are going to love this. But your users can hate you. They hate you for making you pay $50 and then giving them text to read. My users love us. They see this and they're like, holy shit, you guys are killing it. I know, man. I know. We're putting our heart and soul into this. You can't open multiple, let's go through that actually. You can't open multiple news events anymore. When you click an event, it comes up on the side. It will be possible to have, can you not? 1 second. It's maybe a bug. You can open up multiple events. 1, 2, 3, 4.
I think he meant like side by side.
Side by side. Yeah, we can add that. We can 100% add that too.
Cool.
So, for sure.
Oh yeah, like I said, when you drag it open wide enough, if it could.
Yeah, we'll add that multiple view for sure. Thanks a lot. Appreciate it. I'll send that to my team right now.
Appreciate you, Robert. W's in the chat, guys. That's what I'm talking about, man. Nil, when you're not here, I'm always preaching to the people in the comments. We're not just market in the morning. We're a community. Everybody here that's engaging, that's commenting, you guys are just as much of this as we are. You can also on the, let's see if I can pull it up myself. So if you want, you can also click this top right button over here, and that'll give you that to the bottom if you liked it on the bottom instead of the top, and then you can line them up next to each other too. Instead of going to the side view, you got to click back and forth. But if you have it on the bottom, you could see multiple right next to each other.
Oh, there we go. Sorry, I didn't. To be honest, Kevin, I didn't even know that setting existed. Like I was typing up a message to add that setting. So
there we go, Noab. I got you, bro.
You know, the team moves fast when sometimes the founder has no idea that setting was added. Like I was typing a message. That's hilarious, man.
That's great. But it's cool, man. It's cool. I like side view a little better. I feel like it's cleaner. It gives you the full view of the calendar while you're looking at the reports, but I definitely understand wanting to put them side by side with each other.
Yeah, that sounds fantastic. So I was doing a little bit of digging on some of these things. And I want the users who do get access to this, I love if you guys would be able to break this. Like if there's any way that you can break it and it doesn't return you accurate information, like it gives you something that you're not expecting. Like if you ask for a playbook and it gives you a chart, like please let us know. That's the type of, you'll see this in the coming days. Within the next 5 days, some of our core users and people who filled out the form, Kevin said, will be chosen. It's not going to be a lot of you. It's going to be a handful because we want accurate feedback. We don't want someone with zero experience needing to give us like explain stuff to us. So it's going to be people with medium intermediate experienced people, as well as like a little more people who just got introduced to fundamentals. That way, if you're someone who just got introduced, you can then take most advantage of this. So like next FOMC Fed rate decision, what I expect it does, and this might take like 30 seconds, scans for the next one, and then it prepares the playbook or just the generation for it. So gold is just breaking out of the 50s and heading towards the downside. Just watch this area when you're approaching it. If you're already riding these sells from here, I'm not personally looking for those breakout sells. I would much rather look to see how we react to these price points down here on gold. And what that means on ES, again, I'm not looking for these. I don't know, Kevin, what you think about this, but I don't like taking these types of trade where I'm taking buys right here.
Yeah, now middle of nowhere, man.
Middle of fucking nowhere. This is like Sahara Desert. Like I don't want to get burned in here. Like I'd rather just wait for price to come down to my cool price points, and I can then execute more calmly.
Absolutely. Guys, NASDAQ right off of that level we had off that 29,520 right here. Look at that perfect reversal off of there. That is 100 points easy right off of that zone. Hormuz ass trade. Yeah, I'd be careful though. I'm with Nalab on the breakdowns. If you're in a gold short, I'd really be more interested in looking to take profit at this point. But we are getting a bit of a move. We can take a look where oil is currently priced at. If oil's moving higher, we know that can help support a more short-term bearish on gold. But look at oil. Oil's also range bound. It is back above 70. Just really going to have to see. I'm a big fan of using oil to gauge that momentum and strength of general markets, especially with the whole war situation, but that has slowed down in the past few weeks.
So this is pretty cool. Interest rate
Nice.
tracker, the way it displays it, what the probabilities of no change are for September, for October, and then also what the probability of hike. So you can see the probability of the hike has gone down significantly, right? Like the chances were about 30% in December that they were doing for hike, and now it's 18% in October. So, and also the chances of cuts also increase as we go deeper into, and that's what I mean. The further we look, the chances of cuts go up and the chance of hikes go down, right? And that's purely because of dynamics of crude oil coming down. If these tensions get faded out, that's going to continue happening, is that the hike probabilities will continue to go lower and lower the further outlook we have. The next 6 months, 9 months, 12 months outlook will be lower and lower for the hikes, and also for the no change, and higher the probabilities for the cuts because of just market dynamics. So these are the things you can do now, guys. Like, of course, like, see, this is what I mean. We're still testing. This is still in testing phases. So I asked about the Fed decision, and this is where I have to refine our model. Is that it returned to me Philly Fed Business Index on July 16th. Great job, buddy. Thank you so much. So this is what I mean. I'm transparent with everything we do. And now, but it did return to us market implied rate odds. So things like this. Why on market has terminal shifted to gold? So if you want to know why it shifted to gold, you can read the Gulf conflict on Hormuz disruptions drive oil prices sharply higher. And if you click this candle on market, you can also get a complete breakdown on gold reverse lower on initial oil Iran war premium faded. Gold moving followed a sharp geopolitical spike in oil and safe haven demand. Gold had jumped back on US Iran. And like, yeah, because there's this back and forth that happens, right, in geopolitics, where one side will come out and say, oh no, the strait's completely open. The other side will say, no, it's closed, right? So it's just back and forth, and we're constantly refining our systems. So if you ever see something that doesn't look right, feel free to reach out to us, drop it in the chat. I'll see it. All 20 of us on our team will see it, and we'll get to it. But it's this is what's holding impact right now. If things change, especially with CPI coming out tomorrow, one thing I'm going to be watching is if this holds weight going into CPI, I would watch for a flip watch to show up, because traders need to keep this in mind. Sentiment can shift. And if it shifts, it's the things that are actually causing it to shift that can push it down, right? Sorry, push it up. Yeah, exactly. So headlines are coming in all the time. And when you get these breaking headlines, Trump saying war is done, market's going to end up picking that up. And although you get that initial spike and it gets faded out, things like this get reversed pretty quickly. So our system doesn't evaluate things at market close. It's constantly evaluating and updating. Like, see, updated 59 minutes ago. It's because there's so much information and data that comes in. You have to stay up to date with it. You can't be showing a bullish bias and then gold selling off, right? But traders also don't understand that gold is inching off to an area where it's almost sold off completely, right? So again, if anything disrupts you, if you don't understand what's happening, click a candle. And we're making this easier and easier. So you're going to see a lot more things happening where you can drag the candles and see what happened during this period. Like things of that nature we're coming out with. And other companies don't even stand a chance. Like, you'll be able to drag from here to up here and see, oh shit, what caused this pullback, right? And that's, I think, very cool, is being able to do something like that.
So is there a notification?
Yeah, so we're building that out.
Cool.
At least, so that we're building that out. Is it Elisa or Elsa? We're building this notification system out on bias switches, as well as more deeper, like flip watch notifications. So all these things is currently being built out. We're coming at it one by one. Just to reiterate, our feature releases, this is what we're getting out. This is going to help a lot of people. And then we have that bias notifications and systems in work as well. Elsa, I think I got it right. Okay, cool. So gold pushing lower. If you get a retest of here, just be careful, because you can short this deeper into downside here. But I'm watching this price point here, and I'm watching this lower 39.75s, 39.60s areas for potential reversal buys. And that's that could be however you want to trade it. If you want to just trade the downside and ride that out, I'm more so anticipating softer CPI, and I want to see how this plays out and sets up leading into CPI.
Awesome. Yeah, it's funny, man. It's what we were covering last week. Last week, price action was horrible, man. I don't know if you saw it too on the S&P and Nasdaq, even a little bit of gold. Just
yeah, dude, I had my worst performing week of the year last week. So
yeah,
like
these
but a
markets.
lot of my mistakes, like when I sat down over the weekend and went through it, it was purely psychological mistakes that I shouldn't have been making, driven by a whole bunch of things going on, just work, stress. You know what I mean? And sometimes it's just best to not be at the charts. So
that's right.
Yeah.
Good. Yeah, good. No, 100%. And you know what? Last week is a great example of being away from the charts, knowing when not to trade, and knowing that markets are up in the air in a sense that markets don't know. Are we leaning more towards optimism now because inflation's coming lower, or is inflation going to come out higher than expected, not lower than we were hoping it would be? And it might take even longer, right? Which could also have a bit of an impact on the market too. So really a wait and see to see how CPI comes out tomorrow. It's going to be big.
Yeah, 100% CPI is going to be big. I want to see how we take out these lows and we react in this price zone. But I'm also anticipating a softer CPI. So however it sets up, man, I'm just there to take this information in and then just execute. Like, I'm not here to try to buy the dip here, buy the dip here, buy the dip here. I just want to see where we can bottom out. And it would be something similar to, okay, we take out a low, we tap into a demand area, and then we push up. And maybe we set up for CPI in that case. Like we push up in this intraday period, and then we start setting up and continuing towards the upside with softer CPI. So that's just my anticipation, whether that happens from down here. And then that still means that the bearish bias plays out, but it also means that we are setting up with what potential higher time frame reversal from a key area. So these are just things that I want to keep in mind as I go into this next quarter with a potential of the macro regime shifting and this position and the short side position completely unwinding.
Awesome.
Somebody said, please offer the extension for TradingView on Safari too, not just Chrome. Thank you. Yeah, we're working on that. That should just be out in just give us a few weeks. It's a bit of a process for Safari. Sorry, for Safari, because you have to submit for Apple for approval, and it's just a tedious process, honestly. So that's in the works for sure. That's also in the works for other platforms like.
Wouldn't you guys rather the market team on the back end be working on the app than Safari?
Yeah, for app, man, all we're waiting for is just approval. It's Apple's side. You know what I mean?
Beautiful.
So Apple's the one that's keeping us kind of tied down on this case. So yeah, Kevin, unfortunately I have to jump off. I have a meeting in about 5 minutes.
Bro, you get out of here. Yeah. Thank you for joining.
Of course. Take care, guys.
Absolutely. No, take care. Thank you again for taking over for Jeev today.
Anytime.
Take care, bro. All right, ladies and gentlemen, back to some ES, back to some NASDAQ. Talk about range-bound markets. We're getting another taste of what we got Friday, of what we got Thursday. Well, Thursday was a nice move. I believe Wednesday was more range-bound, came to support and reversed. But look at the price action off the open. We didn't reverse on the NASDAQ or the S&P until 12 p.m. Eastern. That is 2.5 hours into the New York session. For those first 2.5 hours, price went up and down, up and down. People call this barcode price action, where you could take a scanner to the chart and you could scan something here. We leave that price action alone. What are we getting today? Today, we had a little bit of what we saw on Thursday, where we had a dip off the open. So here we had our rip off the open. We rejected open price on the S&P. We moved lower. We failed to breach that recent higher low. So we're still holding technically a bull trend here in this short-term time frame. NASDAQ, great support area. I would really be looking for longs at this point on these equities, especially with the market fundamentals holding us a bit more bullish too. We can take a look at NASDAQ here, slightly bullish. Stable labor market support soft landing narrative for corporate earnings. Chip and AI sector strength draws fresh growth-focused inflows. Remember, AI and tech, that's NASDAQ. Yes, it impacts the S&P too, but if it's much stronger and impacting much heavier on our equities and tech, that's when we want to look at the NASDAQ. NASDAQ is ripping higher from here. This was a great zone. Guys, I posted in the comments. We'll see when I posted it. But I posted support on NQ, Support on NQ, I wrote this at 9:45 when markets were just starting to break, when they were at 29,595. I said support on NQ, 29,400 to 520. Look at the exact low we made on NQ here, 29,518. Dipped right into that support range, found support, it's moving higher, could use a pullback. Here's a higher low, breach those recent higher highs. NASDAQ is continuing, and we're most likely going to continue and make our way towards that 29,800. Remember, guys, in our pre-market prep, I always tell you guys how important it is to prepare in the pre-market before you trade. I gave us a 400-point range on the NASDAQ, 365 to be exact. Well, guess what? It could have been looking for longs down here and targeting a nice 200 to 300 point move to the upside on NQ. Even if you're looking for this recent pre-market high right here, around 29,800, that's still another 200 points on NASDAQ. Great trade opportunity right there. I would be very careful if you're taking any trades today. You want to size down, you want to be prepared, and you want to also come to the understanding that markets are not just trading off of A, B, and C right now. Markets are trading off of anticipation right now for CPI, which is tomorrow. So can we reverse and make our way back higher like that? Yes. But what's more realistic in the current market structure we're seeing? Well, unfortunately, what's more realistic would be we stay range bound between support to the downside around 29,500 and resistance, which could start lining up near VWAP 29,700. So making a smaller range, we just have to be aware of current market conditions and the bias and fundamentals and headlines behind it. Now, give me 1 second here. Okay, we're good. Okay, so open price on ES. Excuse me. We're rejecting. I was trying to mute that before. I was like, all right, it's gone. Gold is still trying to chop its way lower. I will say, on the other hand of gold, it had a strong move, but look at the volume starting to pick up here. So this volume tells me one of two things. Depending on how this 15-minute closes, we're going to continue lower, or if we close somewhere up here and we're at a reversal point on gold, we're also at a reversal point on the dollar. So if the dollar starts moving lower, we know that that supports gold to move back higher. Gold is also in a point of support that it was, this was Wednesday of last week. So I would be looking to see a possible reversal on gold here. However, if the dollar starts blasting through, gold continues to move lower with the volume that was picking up, then we do not want to fight that trend. But right now we are starting to see some signs of a possible reversal, but that's it. We're just seeing some signs. That doesn't mean you want to enter as soon as you start seeing some signs, because if once you start doing that, you catch 1,000 paper cuts. Because guess what? You could have seen a sign right here on this green candle, took it long as soon as that candle closed green, and you would have been stopped out immediately. Do you really want to take a trade and get stopped out immediately? And the answer to that should always be no. Okay, next setup. Okay, look, we have another candle, longer wick, volume's picking up, looks like we're reversing. If you took this long trade, guess what? You're just throwing darts on a board and hoping something hits bullseye, because this one also looks like it's getting ready to stop out. So be careful with what you're trading, be careful with how you trade, and be aware and acknowledge that the zones you mark out in the pre-market are just areas of interest where you're anticipating price to react to. If we don't get the reaction, you're not forcing trades, period. There's never a time in the market that justifies forcing a trade. NASDAQ continuing higher. Again, I do want to see those bulls continue on NQ. What would also help with the confirmation of this trend for NASDAQ to make its way to 29,900 would be the S&P scaling above 7610. 7610 on ES. Go to fill that gap at 7625. That looks like a nice move right there. Yeah, nice entry on NASDAQ. Absolutely, brother. Absolutely. It even gave the pullback over here. Now, pullback entry-wise, it was a little tricky. We didn't create the volume imbalance or anything. It did create, however, a small 1-minute FVG, which, guys, no matter what your trading strategy is, you want to be coming back to the same thing every day. You want to be using the same entry models, same support, resistance, supply, demand, fair value gaps, liquidity sweeps, market concepts, whatever you're trading, you want to be able to repeat it every day. You do not want a system that sometimes I'm trading fair value gaps, and sometimes I'm trading the VWAP, sometimes I'm trading VWAP extension bands. No, you want to find what works for you, what you've seen the most consistency with, and you want to build off of it. You want to trade it every single day. And as market conditions roll over, that's when you start to understand, okay, this is starting to change. The market environment is starting to change. And now I have to adjust my trading style accordingly. Best way to do that is journaling your trades and journaling the days and having that pre-market routine where you're going over, okay, this is level 1 that I'm looking at. This is level 2 that I'm looking at. Now going into those levels, if we get a reaction, I will go long off of level 1 and I'll target and have 2 take profits. Take profit 1 will be VWAP. Take profit 2 will be that next high or whatever the case may be. Look at that. We're getting a nice Trump candle right there. How wonderful. Let's see, right off the face of the earth right here. Don't be in anything. Nice sweep of the low. Don't chase these shorts. It's probably going to wick right back higher again. I mean, would you really be surprised at that? And there we go. See you back later to those highs. This is insane. What is this? What did he say is a great question. Because I don't even know if a headline came out with that. Because I didn't hear it with I didn't hear it on market. You know what it is, guys? What I'm seeing these manipulation legs as, oh, here we go. Trump regulators seek to discourage loans to undocumented immigrants? No, come on. That's not something that would impact markets like this. That's right over here 1 minute ago. But that's the only headline we're seeing right now. That's not the headline that moved it. Ain't no way. Ain't no way. But that was insane. You know what it is too, guys? Something I wanted to mention. The amount of low volume we're dealing with on days like today, on days like Friday, compared to other days where we had clean trends, we had continuation. The low volume is a very easily manipulated. And when we say that, I don't mean like, oh, of course you're going to manipulate it. Stop hunt this, stop hunt that. Yeah, markets are going to perform stop hunts. Nothing new there. But when we say heavily manipulated, what we're referring to in low volume markets is that, let's say our average volume is, we'll just put it at 100. Average volume is 100 volume on all of our charts. So that helps us with A, B, and C. That means if we want to see a big impact, we have to get volume of 300, something 3x. Well, if we have volume as low as 50 on that scale, then it's going to be a lot easier for a heavier volume shelf to move those markets that quickly. Yeah, Trump tweeted on Truth. Trump said he's reinstating blockade. Okay, and I bet you guys oil felt that. Crude oil probably through the roof right now. There it is, 73 to 75. Bit of a spike, didn't sweep highs. So I'd be a little careful with that. I'd want to see the follow through here on oil. If oil can continue to the upside, then we can most likely see some more downside price action on the NASDAQ and S&P. But look at that. NASDAQ swept those lows, reversed right back up for the most part so far. Got to be careful. Got to see how things come out. Here comes that market headline. Trump says Hormuz Strait open, reinstates Iran blockade on ships. Proceeds information. So is bro blocking it, or is he saying it's open again? This is ridiculous. Reinstating Iranian blockade. So he's reinstating the blockade, but then he's saying the Strait of Hormuz is open. So again, the push-pull right now, the distraction factor, the manipulation factor into the markets. There's a lot going on that as traders, we have to be able to recognize and go, I'm not trading this. Ain't no way I'm trading. And if I am trading this, I'm going to take profit pretty quickly because I know something can happen at the drop of a hat before we even know because of how quick markets react. Yeah, exactly. Another vague comment. Trump is contradicting himself with a 20% tariff on oil means higher inbuilt inflation on oil by 20. Yeah, exactly. Like tons of stuff, man. Yo, LG, I think you're right, homie. But I don't even think that's a question anymore. I feel like we knew that. But let me see if I could find the headline or anything. Nope, not seeing it here. Oh well, yeah. No, we saw it. Trump is over trading for sure. Did you guys see Trump took so many trades? Let's see. We could probably look it up. How many trades did guys? It fills it in. In Q1, President Trump investment account made 3,642 stock trades. Is bro trading on the 1 minute chart? How do you even take that many trades? The flurry of activity, which spanned across more than 1,000 different firms, generated transactions between 220 million and 750 million during the 3-month period. 3-month period, 364 trades. Yeah, hyper scalping, no joke. I mean, yo, let's do the math for a second. 3-month period, 20 trading days in a month. That's going to be 60 days. So if we take 3,642 divided by 60, 60 trades a day on average. That means some days he was trading 80, or he or whoever's in control of his firm or situation. 60 trades a day in that first quarter for Trump. That is insanity. Bro, it's 100% gotta be illegal, but whatever, man. I'm sure there's ways around it. He knows all about getting around the law. His attorneys, how they get away with stuff, and it is what it is. Right? Nothing we can do about it other than if you're here in the States, go out and vote. Right? That's it, man. Now, imagine if we find out his P&L is negative because he's overtrading himself. That would be hilarious, bro. That would be really, really funny. Ladies and gentlemen, I'm going to wrap up the market in the morning stream there. I hope you guys had a fantastic trading session and a great day. I will see you all tomorrow. Tomorrow's CPI, me and in the lab will be covering it. Have a great day, and I'll see you guys all later. Peace.